Major U.S. equity averages rose today on an influx of deals reports. Now, Matt, of course, the sequestration jitters remain, and there's no deal in sight yet on averting the spending cuts. And how nervous are the markets right now about this issue?
Well, we're not seeing any nervousness at all, up another 50. But as we talked about earlier, I think you're seeing some of the deals take the limelight away from what's going on in Washington. So it's good to see the corporates are taking over this economy here. That's where we want it. We want it in the hands of not the government, we want it in corporations. And they've done a nice job with the money that they hoarded over the last year, using it wisely, I hope. As the beginning of this new year. We've seen some monster deals over the last couple of weeks, Heinz being the big one, Office Max and Office Depot today, possibly. So hopefully that deal goes through, because if that doesn't, maybe it shifts back to what we've seen in Washington.
And tomorrow we've also got the Fed minutes. How concerned are you about the possibility that some Fed members may have expressed concerns about too much Fed easing?
Well, I think that's about time we start talking about that at least. We're not going to expect anything for at least 2 or 3 quarters. So we have probably the whole year to worry about that. But if we need to start talking about it, otherwise we're going to have a situation like we have in Washington right now. We don't want that. Let's get the dialogue going. Let's get it in discussions. Let's get it out to the public to see who's thinking what. And that would help the markets greatly. So no one, market does not like uncertainty.
And tomorrow we've also got some housing data. What if the data disappoints?
Well, we saw some housing data that disappointed today, too. It was 2 points lower than what they expected, and, we're up 53 points. So while housing's been an enormous part of this rally and the home builders have been benefit greatly from this rally, we're not seeing it have an impact much today. So as we go forward, I think it's going to be important, and we'll take it as it comes. But I think we have enough offsetting news right now that we can highlight any positive, and we can, kind of brush aside any negatives. We've seen the market overcome any bit of negative news over the last at least year. Since the new year.
And how strong has the move been from debt securities into equities of late?
Well, we've seen massive flows from funds into funds. So obviously it's got an enormous factor. There's plenty of money on the sidelines. We all know that. We can see that in the way the market's reacting. So none of this is a surprise. When you can return 2% on debt, and then you can go in the equity market and buy a Netflix and make 300% in a matter of a couple of weeks, where are you going to put your money? So it's obvious right now equities are where people are going to flow, and it's just showing from the market rally.
Thanks, Matt. This is Andrea Say reporting for The Street.